Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. I'm making professional trading simple. And welcome to the Sunday afternoon, getting ready for the new week, month end, December time frame video. I hope all of you have gotten over your little tryptophan uh, addictions from the turkey. And now it's time to dive back into the markets. Big news came obviously on Friday with the Dubai bank disaster, potential disaster. I'm sure they'll figure out something over the weekend, and I would assume that by the end of the weekend, we will have some sort of news stating that the banks are okay, everything's fine, don't worry about it. We'll cover whatever we need to cover for whatever we need to cover. That has been the MO for every country that has had the banking problem. I would not assume that it would be any different this time. So that whatever comes about with that, I would assume that it might be good news. If not, I'm pretty sure we're going to see that reflected in the markets come Monday. But they come out and say that the banks are okay, everything's fine in Dubai, we've got it covered, and that, along with better than average Black Friday numbers, could give us a little bit of a boost to start the week. We are coming into the end of the month, and it's very common, and we've seen it over the last few months, that things tend to maybe trickle upwards ever so slightly into the end of the month. So we'll see if that stands true, and we'll see if the markets really believe any news that might be released on the Dubai markets. We won't know until the futures open. So we'll want to watch your open come Monday morning as for the future direction of things. From a charting standpoint, this is what we've got. Here's the Dow on a 60-minute. And as you can see from here, we have been in this channel to the upside. It looks just to me like a really giant bear flag. Now we have broken out on Friday, come back up to retest it, held, and move back down into support. So we will see where we will open. The gaps have been changing these formations very quickly over the past few weeks. But as you can see, if we really just look at it in the bigger picture, it's just a big trading range. This 10,500 to about this 10,200 or 10,250 area has just made for a big sideways move in the markets. We'll see that in a lot of the other indices as we move forward too. But here is our line to watch on the 60-minute, and that is a break below this lower trend line and potentially a move back down. From a daily standpoint, here we are back up to this upper trend line, and as I've been saying, why not take a defensible short at these areas? Because this line has done nothing but hold in the past. So, as it has stand to reason over the past few months, once again we got up into this area, and it held on a sharp pullback. Now we move back up into it again, and it held on another sharp pullback from Friday. So for those of you that have been taking shorts up in this area, we've been doing okay. We have been seeing some pullback. Once again, stuck within this trading range, though, with this upper line and this little lower line. Stock's been moving in between here. We'll see where the move ultimately comes. If they're happy with retail numbers, you may see this come up and retest this upper trend line even one more time. Keep your eyes on that early in the week for that. But if it does get up into this upper trend line, once again, a very defensible place to go short. It's worked in the past. Why not have it work in the future as well? NDX on a 60-minute. You were looking for a break of this trend line here. We got that. Now we moved down. Huge gap down on Friday. But look what the markets did. Most of them did the exact same thing. Shoot straight up, pull back a little towards the end of the day. NASDAQ, no different. Opened right at support, shot straight up, right into resistance, and then pulled back. Crazy how that works. However, right now we are in kind of a tweener stage, so be careful of your trading, especially the first half an hour on Mondays. That tends to be when a lot of what they call amateur hour happens. So I would be watching that tomorrow morning as the markets open, because we were kind of stuck in the middle of nowhere right here. Not a really good place to be taking a trade long or short. From a daily standpoint, you can see the gap down and the move back up, held at resistance as we saw on the 60-minute, pulled back again. However, it did close above the 20-day moving average, so if you're looking for a bullish sign, that would be it. If you're looking for a bearish sign, notice that we've fallen out of this rising wedge again. So once again, early next week should give us the answer. We had declining volume at a precipitous rate last week for good reason. I mean, it was Thursday. It was Thanksgiving week. Not a lot of trading going on. We'll see what the big dogs do when they get back. From a weekly standpoint, if we look at this from a purely charting aspect, this just looks like a bull pullback, which means there is more upside to come. If you're looking at it from a weekly standpoint, it's going to have to get way down here to this 1695 and ultimately below that to really show any overall heavy bearishness in the markets. SPX on a 60-minute, straight sideways. Take it from about 1110 to about 1185 and you've got nothing but chop since the middle of November. It's been sideways motion. Now there have been some days in here to trade, but nothing that's, been particularly good from a swing trading standpoint. If you bought the market back here in the middle of November, you're all but basically break even 2 or 3 weeks later. So the buy and hold was not good necessarily for the last few weeks, but there have been some intraday trading opportunities. When we get a larger break, either above this area up here or below this area down here, then we may see some real movement to the markets and some real opportunities for not only day trading, but swing trading. SPX on a daily. Looking at it here, these darker blue lines, everything's starting to get a little messy with all the extra stuff I have in here, but pay attention in particular to the dark blue lines. That is the new channel we are following. Bulls are looking for a break above it. Bears are looking for a break below it. Right now, we're kind of in a tweener stage. We are right at the 20-day moving average. In the past and lately, it has not held all that strong, so I wouldn't call it a strong line of support. The stronger line is definitely right down here about the 1070 area. 1070 to 1075, which coincides with the 50-day moving average. That is certainly the more stronger line of support in the near-term future. We'll see if it makes that mark over the next week. Weekly, same thing. We have pulled back, retested the bottom side of this trend line, and now we've got two little tiny candles sitting up here. That consolidation, until proven otherwise, is still bullish. Needs to get back down and retest this area down here and ultimately break below on a weekly time frame. A close below here on a weekly time frame gives us the bearishness that that some have been looking for in the markets. VIX on a daily, look at this huge gap. This one candle where fear poured into the markets basically wiped out, 2 weeks worth of work on the VIX to the downside. Now that might all come crashing back down again tomorrow morning if the Dubai debacle thing is kind of over and done with. People tend to have a real short memory, so it's these disasters when they happen on a long weekend like this tend to kind of work themselves out and be not quite so scary come Monday morning, just because especially Americans have a really short memory when it comes to these type of things. So it wouldn't be so watch your trading early tomorrow morning and see if this fear continues to elevate in the markets. But I would expect some of this, whether or not we go up or down in the markets, makes no difference. I would expect the VIX to maybe have somewhat of a move down tomorrow, just because the overall shock and awe of it is done. VIX on a weekly, not Wix on a weekly, is coming down into this dotted trend line here. You see it held very nicely last week. Once again, looked like things were going to finish very low and came tearing back up to the upside. Very choppy for the VIX. There's fear, then there's not fear. Then there's lots of fear, then there's really not a whole lot of fear. And that's basically what we're seeing in the markets. It's being reflected in the options and in the VIX as we push from week to week. It's been very choppy. Apple. Been watching this one for a while. Now this is interesting. Look at how we got a gap up and now a gap away from this area here, leaving what appears to be potentially a little small